We have a strong treasury and a very competent management team to advance this project. We have an asset that has clearly shown that it can grow with sustained exploration. We've grown the resource estimate. And the third thing is we are drilling. We have delivered a fourth resource estimate, and we're working on a preliminary economic assessment. So I think we've set in motion a process which will clearly reward the shareholders.
Hello, everybody, and welcome to another virtual corporate update on the Online Investment Conference. My name is Peter Norman, founder of the Online Investment Conference, and as some of you know, our goal at the OIC is to provide you, the investor, with investment ideas worth watching. Today's investment idea is Cartier Resources, listed on the Toronto Venture Exchange under the symbol ECR. Our presenter is Philippe Cloutier, President and CEO of Cartier. Philippe, welcome once again.
Hello, Peter.
Phil, a month ago, you announced a 25,000-meter drill program was about to get underway on the Chimo Mine project. Since then, you've also issued a press release with an upgraded resource estimate. You're obviously getting to work on exploiting the potential of the massive increase in your land holdings created by the acquisition of the East Cadillac property. Here you are with another update, so let's get into it.
Well, thank you. Indeed. I'd like to remind the audience that once again, our key focus is the Quebec portion of the Abitibi Greenstone Belt shown here. We have 4 deposits with 4 projects with gold deposits and well-defined geometry that offer a tremendous potential to grow rapidly. Our obvious flagship is the Chimo Mine project, and that'll be essentially the remainder of the presentation. Remind you that the Cadillac Fault is over here, and the Windfall district, where our 3 other projects are over here. The Chimo Mine project, our Chimo Mine project, was consolidated with O3 Mining's East Cadillac project. And this is the footprint of the new land holding that Cartier holds. It sits along the Larder Lake-Cadillac Fault, and we now own over 40 kilometers of that fault. And just as an aside here, our project basically has the same footprint as a land holding that would cover the Canadian Malartic mine in Malartic all the way out to the Val-d'Or. And as you well know, there are numerous mines and mills along this stretch of the Larder Lake-Cadillac Fault. And so why aren't there as many mines along this stretch here? Well, indeed, there's one. It's the past-producing Chimo Mine that is 100% owned by Cartier. The consolidation of the East Cadillac project with our Chimo Mine project, well, the immediate consequence is that we eliminated the boundaries. We immediately increased the resource count, which I'll be presenting, and the potential to discover new ounces along the fault. And moving forward, obviously, as you mentioned, Peter, we initiated a 25,000-meter diamond drill program. We recently published a new resource estimate. We're working on a PEA. So I think this and the news flow associated with that is going to, enhance our profile in the capital markets. So diving a bit closer to home and the asset that concerns us today, here's the consolidated land position, the Chimo Mine project here, and the Nordo West deposit. Well, we recently upgraded the resource is to merge the indicated and inferred resources that were on the West Nordo deposit to the 3 previous mineral resource estimates that we had on the Chimo Mine project. And we now stand at 720,000 ounces in the indicated category and 1.633 million ounces of gold in the inferred category. Note that in the previous years, we had made public 2 internal engineering studies, one which was the shaft haulage capacity, the second which was the ore sorting results from 2 studies. And as you'll see later, we also worked on stope design and mine sequencing. Obviously, the recent consolidation of the Chimo Mine and East Cadillac properties puts us in a position to exploit the tremendous potential along the Larder Lake-Cadillac Fault in the coming years. So let's look at this even closer focus on this part here. Here's the same slide as previously, but with a geological background. You could see the trace of the Cadillac Fault that marks the contact between sediments and volcanics. You can see that along this fault zone, there has been numerous drill holes with numerous places where gold has been identified, namely the Chimo Mine, past producing gold mine. And with past drilling, we know where we could do future follow-ups. There's also this northern fault here, this northern splay fault, which shows the same type of potential, where previous drilling has indicated, gold mineralization. And so that at a future date will also be investigated. I've left on this map the former Chimo Mine property boundary in black, and you could see that the property boundary areas are specifically areas where there had been very little drilling. And the mineralization in this part of the gold system is where the Cadillac Fault meets up with north-south cross faults. And therefore, the mineralization plunges steeply west-northwest, as indicated with these yellow lines. And therefore, ultimately, even the northern boundary at depth, our mineralization on the former property would have plunged on the East Chimo Mine. The next thing I'm going to do here is I'm going to show you a vertical cross-section of only this portion of the Chimo Mine gold system. So here we go. From west to east, this is a 3.7 kilometer stretch of the Larder Lake-Cadillac Fault, where the Chimo Mine gold mineralization is known to occur. This slide here presents the outline of the mineralization that was part of the fourth mineral resource estimate on the consolidated West Nordo deposit area with the Chimo Mine mineral resources estimates. Just so you know, the former property boundaries that between Chimo Mine and the East Cadillac projects was here and here. The current drill program, well, we have a machine targeting the expansion of mineralization on the East Chimo Mine area, and here at the West Nordo deposit area, where we have another drill this coming winter. We're going to move the rigs out over here and over here. You can see that by eliminating the property boundaries, we have more room to grow via drilling and additional resource estimates. The other thing I want to point out on this slide is that in the late 80s, there was a portal that and a ramp that was sunk down up to here. Their obvious interest was the potential that we're seeing here via historical diamond drilling. And obviously, this system can continue to grow here. It continue to grow at depth here, and obviously in the West Nordo area down in here. And let's not forget the mineralization that I showed you previously to the east here. So if we take a closer look at the details of this resource estimate that we published on August 30th, well, here's the table. So we've, in the central gold corridor north and south, we've actually increased the indicated resources to 720,000 ounces of gold, and in the inferred category to 1.633 million ounces of gold. And note that these grades of the mineralization can be upgraded to almost double that via the ore sorting that we are considering for the Chimo Mine project, and it will be integrated into the preliminary economic assessment study that is forthcoming. So just to give you an idea of the in-house preliminary economic assessment that we had conducted prior to the consolidation of the Chimo Mine property with the East Cadillac property, here's a slide where we can see to the left of the slide where I'm showing the shaft, some of the underground workings at Chimo Mine, and what was mined out in gray. At the same scale, in the central part of the slide, you can see the shaft and the underground workings, and you can barely pick out what had been mined out. And you could see via all the drilling that we conducted in 2017 to 2020, the resources that we delineated immediately around the shaft and the underground workings. And you could understand now why we wanted to get rid of these property boundaries here and here, because the Northwest deposit, which is now part of the consolidated resource estimate, is easily accessible via projected mine workings that is being designed in the preliminary economic assessment. So obviously on this slide, you could see that we were well advanced in the engineering aspects of our project because we felt that this thing was on a path to production process. And again, I'd like to show you that we're drilling in this area over here, in this area over here, and that this winter we'll be drilling over here and over here. So, that's a summary of the technical aspects of what we're working on. It's going to walk you through the evolution of the project that we've had since 2017, where we got drilling, produced a first resource estimate, kept drilling, produced a second resource estimate, kept drilling, produced a third resource estimate, and then we're limited by the property boundaries. So we consolidated the properties, did a new resource estimate, embarked on a diamond drill program, and ultimately we think that this system is going to continue to grow the resource base immediately in the vicinity of the mine infrastructures. And that does not even address the tremendous exploration potential that we see kilometers along strike of the Larder Lake-Cadillac Fault. We're focused on drilling and finding additional ounces, and then obviously upgrade the resource estimate with the new drill results. And while we're doing that, we're pursuing the engineering studies to deliver the preliminary economic assessment. All of that is managed by an experienced team, myself, our VP, Gaetan Lavalière, Renan Deroff, our senior geologist, and the financial aspect is supervised by Nancy, our chief financial officer. I'd like to remind people that, as many other juniors, we're in the process of obtaining the Ecologo certification. We have mineral exploration agreements signed with some of the First Nations, and we're committed to board succession and diversity. And finally, a part of the value proposition is the fact that we are trading at a very low share price, although we have built tremendous value in the project. We're sponsored by senior mining companies and very prolific junior producers such as O3 Mining. Our share position is topped off here by 10% of Quebec Sovereign Fund's board and management. So over 45% of our shares are in solid hands. Another 26% of our share position is in long-term retail. By that, I mean 10 to 15-year supporters that believe in our story. And the recent 30% free float, well, that has been a flip over, a transition of an entirely new demographics of shareholders in the last year. We have $5.5 billion in the bank. We have a tremendous asset. We have a drill program underway. We have a PEA yet to be delivered. I believe we should be on your radar screen. And I believe Cartier will continue to deliver positive results for our shareholders. With that, I thank you, and please do not hesitate to reach out if you need more information.
Phil, super presentation, as always. Let's take a few questions here. What are the activities going to be happening over the next couple of months during the fall and running into winter?
Well, once again, that program that we initiated early to mid-August, a 25,000 meter drill program, is entirely focused on expanding the resources along the known gold mineralization. So low risk, high reward drilling, set to grow the resources that we have past the 3 million ounce mark. Secondly, with the recent resource estimate that we've recently published and the ongoing PEA work, we know we're working towards a next phase, which will undoubtedly tell us where to take the inferred resources, to migrate that into indicated, and to continue building value on the project. So in the immediate term, that's what we're doing.
You've had a lot of experience in mining over your career. You're on a path to production process now with Cartier. That must be pretty exciting. Could you sort of talk about that a little bit?
My claim to fame is basically an explorer. So I've not been exposed to a lot of production. But when we built this company, we decided that in order to deliver a product which had a lot of value, that we had to listen to what the senior producers were looking for. They're looking for ounces. They're looking for projects that are substantially de-risked. They're looking for projects where they can apply the 25 years plus innovations in mining and metallurgy. And the Chimo Mine project fits that. Now that we've consolidated with the East Cadillac project of O3 Mining, we have a tremendous land position, a camp scale project that I believe the senior mining companies, well, that's exactly what they're looking at. So that's what we've done, and that's what we've built into our project. A situation that can continue to grow via exploration, advanced exploration, exploration type, projects and diamond drilling. With time, I believe this thing can easily become a 5 to 7 million ounce gold system.
Stock prices are down for an awful lot of juniors out there. A lot of them are getting really hammered. You've got $5.5 million in the bank, so you can ride out any storm over the next 12 months, 18 months. Do you see things opening up in terms of equipment availabilities, in terms of talent availability as a result of the depressed stock prices we're seeing these days?
Oh yeah, yeah, definitely. We've seen that recently. Companies are shutting down their drills. That is freeing up the machines, freeing up quality diamond drillers. It's also freeing up the labs. And you're right. The fact that we have cash in the bank, the fact that we have a tremendous asset with a very clear vision of what to do with it next to continue adding value to it, these things are all positive. Does it change the fact that the markets are bad and investors, don't flock to your stock to buy it and shore up the share price? No, that doesn't change the fact. The markets are brutal, but we're in a situation where we need to continue building value in this asset because the markets will turn. We don't know when, but when they do, we want to be there with results that have projected this project even closer to a production decision. So that's basically our attitude right now.
You've been through a lot of ups and downs in the gold cycle. We're now seeing the gold price hovering around that 1,600 per ounce level. What do you say to investors living through these kind of times? Is this an opportunity or is this a problem?
It's clearly an opportunity. They are reminded as investors that their money, when they invest it, should be invested in areas and in markets or industries that offer high reward and low risk. And to that, I say the Quebec portion of the Abitibi Greenstone Belt offers many positive attributes. One, we've produced for the past 100 years over 200 million ounces of gold, 400 million ounces of silver, 15 billion pounds of copper, and 35 billion pounds of zinc in about 100 different mines. So we don't need to defend our productiveness or prospectivity in that area. We're a province that has a very proactive fiscal regime. We're a jurisdiction that has quality workforce and infrastructure. I think these are all things that should reassure investors that when they do invest in mining companies and junior exploration companies that are operating in the Quebec Abitibi Greenstone Belt and that have assets such as the Chimo Mine project with a team such as ours and a treasury such as ours, I think that's a tremendous value proposition.
Phil, thank you very much. That concludes our corporate update for Cartier Resources today and our live Q&A. If you haven't submitted a question yet or want to submit one later, you can always do so by emailing Philippe at philippe.cloutier@resourcescartier.com, or you can give him a call at 819-874-1331. He loves talking to investors. And now, before we close out the presentation, I'm going to turn things over one more time to Phil for some final remarks. Phil, perhaps you could begin your remarks by reviewing 3 things that investors should remember about Cartier Resources.
We have a strong treasury and a very competent management team to advance this project. We have an asset that has clearly shown that it can grow with sustained exploration. We've grown the resource estimate. And the third thing is we are drilling. We have delivered a 4th resource estimate, and we're working on a preliminary economic assessment. So I think we've set in motion a process which will clearly reward the shareholders. So thank you for your support and your interest in Cartier.
Thanks, Philippe. And before we go, a reminder that today's presentation was from Cartier Resources, trading on the Toronto Venture Exchange under the ticker symbol ECR. Our presenter was Philippe Cloutier, President and CEO of Cartier. The drilling program on the Chimo Mine project has begun. There's lots more news in the hopper, and we'll be back in a month to give you another update of some of the activities going on.
Thank you once again. You've summed it up perfectly. Be well, and let's have a great fall and walking into winter season. Cheers.